Thank you for joining us for part 2 of the weekly trading game plan for the trading week of December 12th through December 16th. And in part 2, we'll select our top swing trading stocks to watch based on our market analysis, our strategies, and trade ideas in part 1 that we did yesterday. So welcome to the Blind Trader, Walter Lyons, DS Greg, Flip of the Shippa. Thank you all for joining us in the live chat for our live stream, and anyone who's watching this video after the fact, thank you for watching our video and for joining us as well. And we'll go ahead and get started. So here's our Google document with our notes for part 2 of our weekly trading game plan. Again, these Google documents with our notes are publicly accessible. You should be able to find the link to our notes for our weekly trading game plans in the description box below, and also in a public Google Drive folder where we store all of our notes so you can access them at any time. They contain links to bonus videos, all the tools that we use for all of our weekly trading game plans. And again, you should be able to find that in the description box below. If you have not already seen part 1 of our weekly trading game plan for this week, titled What Poked the Bear Market, we would highly recommend that you view that, part 1 as well, as that contains our market analysis, strategies, trade ideas, etc. For the trading week of December 12th through December 16th. So again, we'd highly recommend you also view part 1, as that gives us all the input data that we use then to select our stocks to put on our various watch lists, our top swing trading stocks to watch on our watch list. So I'll start off, we'll talk about a few of our trades from last week. We'll start out with our SOXS. SOXS is the leveraged ETF short on the semiconductors. We actually sold that out pre-market on the 8th. You can see we had entered on the 1st of December at 29.61. I had to manually sell that as I had a stop in at 34.46, but again, as we posted in one of our recent shorts, stops are not active during extended hours during pre-market, so I manually executed that when SOXS dropped below that stop level. Got a nice profit, ROI of 16%, which equates to a monthly ROI of 70% for this scalper or swing trade. So congratulations to all of our fellow BeachBum traders who also profited from this scalp or swing trade on SOXS. And as you'll see, we're going to watch SOXS again to see if we can rinse and repeat and make some more money on SOXS by shorting semiconductors. And again, we'll take a look at that in a moment in Webull and look at where that opportunity may be. Good morning, Ellen Krantz, Tony Roses. Thank you also for joining us in the live chat. Good to see you all today. So our second trade for this week is on USOI. We've been talking about USOI. It's an ETN, monthly dividend paying ETN on oil. And as you saw, oil, dipped to essentially near-term relative record lows. And we wanted to get back into USOI. We had scalped USOI for a profit past week or so, and we wanted to get back in before it goes ex-dividend again. The next ex-dividend date recently announced to be the 20th. They're going to pay $1.23 per share. Again, there's a monthly dividend paying ETN, pretty juicy dividend, and we wanted to get back in before that ex-dividend date. So we got in at 78. As you'll see, if some of you got the alert, and you may have gotten a better price than even we did. And again, you can hear more about our thesis behind USOI in last week's weekly trading game plan as well. Helen Krantz asks, what's the difference between a swing and a scalp? Let me see if I can put your comment up. Here we go. There isn't a whole lot of difference, although really, technically a swing is you're trying to swing from bottom to top of a relative support to resistance level. So you're either swinging from a bottom to a top if you're longing, or you're swinging down from a top to the bottom if you're shorting. So it's kind of like it sounds, you're looking at a cyclical type of swing, whether it's a flat, going like top to bottom, or along a trend, an upper trend. Again, you're bouncing between a lower support line and an upper resistance line. Technically, that's what I think most people would refer to as a swing. A scalp is you're scalping a portion of that move. So when something has some momentum, it's moving up, you're going to scalp some portion of that move, and it tends to be a shorter term trade. A scalp I would consider a shorter term trade. Again, you're scalping off a part of that move, whereas a swing, you're really trying to move, take the trade between the support resistance levels. I hope that helps and makes sense. Again, both can be a swing trade tends to be a little longer time frame, and again, my opinion is you're scalping a portion of the move versus trying to swing from a bottom to a top or a top to a bottom. I hope that helps. So again, a reminder, if you want to get real-time alerts when we make trades, we are Patreon members, and you can join our Patreon, and we try to post notifications to our Patreons as soon as possible after we make a trade, either opening a position, getting stopped out, selling out of a position, etc. They get email notifications. Also, these get posted in the alerts category of our Discord. And our Patreons will see that I moved the alerts channels up in our channel list in Patreon so that they'll be more easily accessible to our Patreon members. So we have two alerts channels. One is also gets automated signals from Thinkorswim price alerts that I set. And so then if Thinkorswim triggers, it will post that alert. So you can see there's the USOI alert. And then if we actually take a trade based on one of those alerts, I'll follow that up with what our actual trade was. If it wasn't based on a Thinkorswim alert, and or it's an automated based on our social media posting, it'll show up in the trade alerts channel. So if you find that helpful to see what our trades actually are, you can join our Patreon and get those trade alerts. Again, we don't recommend anyone blindly follow anyone else in terms of trades. You should make your own decisions, make your own trading decisions, as everyone's situation, styles, personality is going to be different. And again, as always, none of this is financial advice. We're not financial advisors. But again, if you would find that helpful to see what trades we're making, then you can join our Patreon and get notified. And thank you for the positive feedback on those alerts, Ollie in the Bay. We appreciate it. So good. I hope that explanation helped, Ellen. That was a good question. Thank you. So we'll quickly look at these trades in Webull. So here's our SOXS trade. This is a longer term chart. You can kind of see where that recently bottomed and it bounced up. So, we were just talking about swing trades. There's a good example. We're buying at the bottom at a support level. You can see it then bounced off at that resistance level, and that's pretty much where we took our profit. So if we look at that trade again, we bought at 29.61, sold at 34.46. So we bought down in here and sold, up in here. So when it rolled over, actually. So I'd trail it with a stop. And so when it rolls over after it bounced off that resistance level, I'd have a stop in there and it would sell out. So again, we're going to watch SOXS. It's on our watch list for next week. If we get a push down, which means they try to run tech at any point and semiconductors get run with it, it'll push SOXS back down. And again, we'll take another shot at longing SOXS, shorting semiconductors. Here's the trade on USOI. You see it, rapidly decline. The oil declined down to 70. We talked about that yesterday. So it was bouncing between 75 and 80, and then it rapidly declined all the way down to 70. So that drove USOI down. Again, I wanted to catch this before the ex-dividend date, so when it broke down below our target price, we went long. Again, if you didn't get into USOI at that time, you can actually get a better price at this time. Again, the ex-dividend date is the 20th, so if you want to get the monthly dividend for December, you will need to go long on USOI before the 20th. Now, just another point on ex-dividend dates in general, we've talked about this before, is on the ex-dividend date, one would expect the price to decline an amount equal to the dividend paid on that ex-dividend date, because the person buying on the ex-dividend date doesn't get the dividend, so they're going to discount the price of the stock approximately equal to the value of the dividend. So just in terms of stops and things, you want to be careful you're not getting stopped out just because of that discounting due to the dividend. So I hope that helps. See if we got any questions relative to those trades. If you have any questions about those trades, please let me know. Grab a drink a sec. Okay, just a real quick lesson learned kind of relative to the USOI trade. One of the things I think Walter Lyon Solidago observed watching USOI is that the prices were kind of jumping around pre-market, and I wanted to point out that sometimes the actual volume of stocks in USOI is an example. You want to watch the actual trading volume pre-market, and even though the price is changing, that it's actually not trading at that at any of those prices. It's people jockeying, their prices, and so the actual volume can be pretty low and choppy in pre-market. Another thing I wanted to share is with this USOI, it's pretty low volume and again kind of choppy. And I had a pretty large order, and I had set that order in Fidelity to be all or none, and it actually dropped below that price, dropped below my limit price on my order without filling my order when I had it set to all or none in Fidelity. So essentially, I missed out. The price dropped below my target price. I was waiting for it to fill. It didn't fill. And so I think the next day I changed the condition on that order to be none rather than all or none, and eventually got that order to fill. So just a lesson learned. I posted this also in our Lessons Learned channel. Again, these channels, Lessons Learned, pretty much everything else under General is free to join, publicly available, so you can see that lesson learned. So just be aware if you have a sizable order on a stock that has a relatively low or choppy volume and you're setting it to all or none, it may not fill. And therefore you might want to change that condition to none to get it to fill. So I hope that helps. Welcome, Spacula. I don't know if I missed anybody else that's joined recently. Good to see you all. So now we'll talk about our watch list updates for the week. This is our real-time watch list. So this is what we're watching real-time during the day. We also have automation that runs and sends us price alerts and movement during the day. So we'll look at our updates and then we'll jump over to Webull and look at the charts. So firstly, we're going to take BDRY. We've been watching BDRY. It's an ETF on dry bulk shipping. It's already run up, so I'm not going to chase it at this point. As we'll see in our ETF spreadsheet, we can always watch any of these ETFs from our spreadsheet and see if it comes back down to the support level that we're looking for. Just right now, I'm not going to chase that one right now. Disney, we had added back to our watch list after we got stopped out on the November 17th. We are trying to sell cash secured puts on Disney. We'll talk about our option strategy, one of which is selling cash secured puts towards the end of this video, towards the end of this stream. And again, how we're evolving in terms of our option strategies. Again, we'll talk more about that towards the end of the stream. But we are trying to sell cash secured puts on Disney around the 86 strike price for about 71 for the December 16th expiration, or around $1.99 for the January 20th expiration date. Now, if Disney plummets, towards that 86 price, we would just go long the shares. Otherwise, we'll see if we can get those cash secured puts and collect that premium just when Disney declines. So FAZ, a couple weeks ago, we made a nice profit on an FAZ trade. It's a bear leveraged ETF on the financial sector. We'll see if we get another opportunity to go long and essentially short the financial sector again. Again, they've been pushing the financial sector up due to increasing interest rates. So we'll see, particularly with the Fed decision on Wednesday, that might trigger a pop in the financial sector, which would drive FAZ down, and then we might get a chance to get in at that point. We talked about SOXS. We've been watching STX for a while. This is Seagate. Again, it's moving with technology. You can see our bonus due diligence video on Seagate, why we're watching that. And then we're taking USOI off of our watch list as we're already long. But again, if you're not already long USOI, something you might want to consider if you can get in before the ex-dividend date on the 20th. And then UVXY. So yesterday, we talked about the VIX, we talked about volatility, kind of our expectations in terms of increasing volatility going into the CPI on Tuesday, going into the interest rate decision on Wednesday. We would have liked to have been able to get into UVXY when the VIX is 20 or below. I don't know if we're going to get that opportunity, but if we do, we want to go long volatility into those events, the CPI on Tuesday and the Fed interest rate decision on Wednesday. They may just, everyone else might be positioning into volatility starting Monday. And also Mondays tend to be you get a little bit of a pop in the VIX. On typically on Mondays, and even more so after like holiday weekends. The VIX tends to pop up on Monday, and then if it's going to retrace, it'll retrace going further into the week. I was kind of hoping again to get a shot late Friday, but it just didn't really settle down below 20. It's still sitting at about 22.83. So I'd really like it below 20 before I'm going to go long UVXY. So also, if you want to get updates, intra-week updates to our watch list, including price targets, etc., we have an automatically generated web page that our Patreons have access to. So you can get access to that, including price targets, any updates I make intra-week or even intraday. And there's also a channel, so if I make any changes during the day, I'll post those to this stock watch list channel in our Discord. That again, our Patreon members have access to. So if you'd like to get more frequent updates to our watch list and also price targets that get automatically updated at the close of every day, you can join our Patreon and get access to that information. So we hope that also helps. So now we'll go and we'll look at the charts for the elements on our watch list. So Webull, I'm in Webull. This is the stock screen in Webull. Just a real quick reminder, if you're not already using Webull, as you can see, we maintain all of our watch lists. You can have many different types of watch lists. And it's also where we do most of our trading. We also do our market analysis, due diligence in Webull. So if you're not already using Webull, they're still offering 12 free stocks to open and fund a new account. So again, it's our favorite trading platform. We use it for all aspects of our trading. If you open your account, you get 2 free stocks, each valued up to $300. If you deposit any amount, even a cent, you can get up to 10 more free stocks valued up to $3,000. And I'll put, you can get the link, our link to Webull, in the description box below. And also in the link section on our home page, etc. We have our link to Webull all over the place. So if you're not already using Webull, you might want to consider it. Get your 12 free stocks. You can always cash them out if you're not don't want to use the platform. So let me see. Alan's asking a question. Do you think there's going to be a lot of tax losses on stocks this year? Alan, great question. And I'm going to talk about that at the end of this stream about tax loss selling, tax loss harvesting, and some, strategies for playing that. We'll be talking about that all month. It's a major aspect of strategizing in December is the effect of tax loss harvesting, tax loss selling, and corresponding the wash sale rule, etc. So, okay, so here's what's left on my watch list right now. We can see Disney's kind of run up after Bob Iger came back. It's run up a little bit, declined with the market a little bit this week. Again, we're trying to sell cash secured puts around 86, but if it were to decline, we could go long Disney. Really anywhere under 90 isn't bad. You can see 86 was the recent low, so we'll see if we get a shot at that. Here's FAZ, again, the short on the financial market. You can see it ran up, but in the past couple weeks we made a nice profit on one of these runs. Again, we'll see if obviously the market was declining, the financial sector was declining with it, so FAZ was going up. So we'll see if we get a pop in the financial market, particularly when the Fed interest rate decision on Wednesday. And if so, again, we'll go long FAZ, short the financial sector. We looked at and talked about SOXS. Now, SOXS has a tendency to move with the tech sector. So when they start to run tech, semiconductors will go up, which is SOXL is the inverse of SOXS. SOXS is the short. So if they try to run tech, that might push SOXS back down, and we'd like to go we'd like to short semiconductors as a longer term theme. They're all announcing poor guidance going forward, weak demand, we're going into a recession, etc. So we like the thesis on shorting semiconductors. STX is Seagate. Again, it tends to run with technology. We'd like it considerably cheaper. So I'd like it down on 47-ish. It's run up a little bit. And here's UVXY. Again, you can see I've got a buy sitting there at 710, which is the recent low of UVXY. I put that in on Friday just in case they happen to dump it at the end of the day and I was away from my machines. So as you can see, I had a sizable buy. I have a sizable buy sitting there at 710, which is just a penny above the recent low, which is 709. So if we happen to get a decline in volatility, I'll catch that and ride that into the CPI and into the Fed interest rate decision. Now, discussing trading volatility again, if you've all been around for a little while, one of my favorite trades is shorting the VIX, shorting volatility, which you use SVXY with, and I tend to have standing orders sitting out at the recent high of SVXY. So if we do get a big pop in the volatility, I would then go long SVXY and short volatility. So we go back, a couple months. Again, it's pretty high because the VIX is relatively low. So, If the VIX pops up into the 30s, then I'd be looking at shorting the VIX, shorting volatility with SPXY. But right now with the VIX in the low 20s, again, you can see SPXY is running pretty high. So again, that's my standard strategy with particularly shorting the VIX. Anytime the VIX pops up in the high 30s or so, it's a good opportunity to short volatility, short the VIX with SPXY. And again, the nature of the VIX is it's going to tend to revert. So it's going to tend to decline, revert to its mean. So again, one of my favorite trades. So now we'll look at our bullpen stocks. Again, if you're kind of new to our channel, new to our community, the concept of the bullpen stocks are ones we're not watching in real time during the day. The automation that I run doesn't look at bullpen stocks. But at the end of the day, I revisit each of the bullpen stocks, look if their setup looks any better. If so, we put them in the game, move them up to our real-time watch list. If they break down or run away, then we just take them out of the bullpen. Again, these get updated on the web page, accessible to our Patreon every day. So any changes I make, they're alerted via that web page and also in that watch list channel in our Discord. So when I'm adding to the bullpen right now, it popped up in one of my queries that I run at end of day is FCAP. If you've been around for a while, we've tried to watch FCAP before. It's kind of difficult because it's low float, somewhat illiquid. It's not optionable, but right now it's trading below cash. It's a financial, it's a bank, regional bank. They appear to be profitable. So they appear to be trading below cash. So we're going to kind of keep an eye on them in the bullpen, see if there's an opportunity there. He does pay a small dividend. Ex-dividends on the 18th. Looks like they're paying 26 cents a share. It's a quarterly dividend. So we'll see. And then FPAY. Again, we've been watching FPAY for a while. You can watch our bonus due diligence video on FPAY. Why we're watching it, what we're looking for, etc. in terms of FPAY. I almost question taking it out of the bullpen due to, the events we're kind of waiting for FPAY before we take any position in it. So you can see that in the due diligence video referenced in these notes. And we're taking nail out of our bullpen. Again, this was a long bull 3x leveraged ETF on home builders. It's already run up. Not going to chase it. Again, we can watch ETFs via our ETF spreadsheet that we'll talk about in a minute. We'll go ahead and look at these charts. Again, Weeble's nice. I can have all kinds of different watch lists. So you can see I've got my bullpen watch list. So we can look at FCAP. We'll zoom in a little bit. You can see kind of I want it at that previous low. You'll see how choppy it is. So again, it's a choppy. It's a little difficult, but if we do get an opportunity to get in at a good price, we might take a shot at FCAP. And then FPAY, again, Flex Shopper. It's been pretty flat, but again, we're waiting for some other information before we're willing to go long FPAY. And again, that's described in that due diligence video. Okay, so now we'll talk about some new ETFs we've added to our spreadsheet. I'm going to let our spreadsheet come up while we talk about those. So again, we have a spreadsheet that tracks all these ETFs, as we'll see. And I'll talk about that in a second. But Easy Mike in one of the Benzinga shows live chat turned me on to these Vietnam ETFs, and he mentioned this VNM, which was a ETF on Vietnam. And after I looked at that one, I also searched the ETF database for any other Vietnam ETFs, and I found this other one, VNAM, and both of them look potentially interesting. The only thing is this VNAM is not in FinViz, so I can't really get the metrics automatically out of FinViz for that particular ETF, so I can't automatically update it. But both of them look kind of interesting. We'll look at them in the spreadsheet in a second. But again, I want to thank Easy Mike for turning us on to this Vietnam ETF in that Benzinga show. The thesis, my thesis behind Vietnam is, with all the supply chain issues, et cetera, we've had over the past couple years with China, you've probably heard people are moving some of their production into countries like Vietnam and other Southeast Asia, not China countries. So that's a nice thesis. I like that idea, and as we'll see, it's already run up a bit. So other people will probably have the same idea already. But I want to watch those and see if we can get an opportunity to take advantage of that thesis. So we're also going to be looking at using this ETF country exposure tool, and I'll probably do a video on how to use that to find ETFs on various countries. It's a nice tool as well. So now we'll jump over to our ETF spreadsheet. So if there's a particular topic, category, industry that you want to look at, I do have some requests specifically, and I'll jump ahead. I apologize if I'm jumping around a little bit. I had some specific questions already on some of these categories, so I want to address those questions. So let me grab a drink, and we'll get over to my spreadsheet. Okay. So let me scroll down to some of the specific questions so I can go ahead and address those right off the bat. Okay, so I'll talk about treasuries. I thought I saw Tanvir here earlier. Hopefully he's here. We'll talk about treasury ETFs. I also had a question earlier, speculation asked about Yang. So we'll talk about China, Yin and Yang, and also about LabU, which is the long on biotech. So let's look at LabU first, which is the long on biotech. So here's biotech, here's LabD, which is the down, the short on biotech. Here's the long on biotech. To kind of quickly answer the question, is it time for LabU? I wouldn't go long LabU unless it's down around the support level of 406. You can see currently it's at 639. You can see it does have a nice risk reward, but again, in a second, I'll talk about why I don't want to go long biotech in the current environment unless it's really at an extreme bottom. So let's look at LabU. Let's zoom out to the year. So again, here's kind of the low of around 406. So that's the support level, the low. And if we look at the monthly, it's sitting in the 630s. Again, my reasoning for not wanting to swing or hold biotech for any length of time is, again, most of these biotechs, they lose money. They're what would be considered a zombie company. They don't make any money. They're burning a lot of cash. And in the current high interest rate, going into a recession, increasing interest rates, and months ago we talked about Tara. There are reasonable alternatives. People aren't going to invest their money in a cash burning, cash losing company when inflation's eating away against the value of their cash, and there are other reasonable alternatives. So in terms of any kind of long-term investment, I don't like biotech right now, and we've talked about that for quite a while now. Having said all of that, if you're talking about a nimble day trading, scalping, momentum trading, breakout trading. You can make good money, trading Lab U and Lab D. It's a pair that you can scalp, or momentum trade, day trade at any given time. You see they tend to run them up and then run them down. You can see it just doesn't hold any of its gains, right? Once it's run up to a resistance level, it's coming down. And it bounces off of support and it runs up. So again, day trading, scalping, momentum is fine. I just wouldn't want to get stuck into the biotech sector. And again, LabVIEW is going to run with technology sometimes because it is biotech. So it's going to run with technology sometimes. It's also potentially going to run with healthcare. So sometimes when you're watching sector rotations, if they're rotating money into tech, you might take a look at LabVIEW. I see Flip was mentioning XBI. Again, LabVIEW gives you more leverage. So, if you're looking for a better risk reward, short-term trading, LabVIEW, LabD is a good pair. So I hope that answers the question. Speculation. Again, short-term trading, great, but again, in terms of any longer-term swing, unless it were at an extreme, I wouldn't be looking at LabU, LabD. So we'll talk about China too, which is yin and yang. So the pair that we trade for, you can see we have a variety of ETFs. You can trade KWEB. You'll hear this pretty popular, but you'll see that the risk reward on yin and yang tend to be better. So that should be up. Yang is the long on, no, that was right. Never mind. Yang is the long on China. And yang is the short on China, the China bear, and yin is the long, both 3x. So you see the risk reward on yin and yang are better than like KWEB. So that's how we tend to trade China. Now, my response to Spacula's question about yin and yang, I'll click on that a second. And I'll show you also what he posted, the news that he posted that was helpful. So Spacula posted this news article from MarketWatch about China's economy outlook has darkened noticeably, according to the IMF. And so he was asking, is it time to go short on China? You can see my response. Not yet for any longer term trade, as the trend, as we've seen most of last week, is the trend is yen up, which is yang down. And again, I'd wait for that trend to reverse. We've got China reopening, they're loosening their COVID restrictions, etc. So again, the trend is, if we look at yen and Webull, the longer term trend is up for yen, up for China, but you get these violent reversals or corrections. So you see the overall trend is pretty much up. But again, on any given day, we could get a violent correction, which would mean, okay, there's an opportunity to go long yang on that day. And one of the ways to see that, if you're up early, is look at the markets tab in the global markets tab in Webull and see, okay, is the Hang Seng, red or green? It's one indication. Then watch the momentum. So again, that's another pair you could day trade, yin and yang on any given day. Follow the momentum, follow the day trade, make good money. Day trading, scalping, etc. But in terms of any kind of longer term swing, we're long yen, and I would stay with that until that trend reverses, which means yen approaches its support level, or its resistance level, and yang comes down. It's pretty close to support. It's still above its 52-week low. So I hope that answers the question. For speculation in terms of playing China right now, yin and yang, trends up, yen trend up, but any given day, follow the momentum, you can make good money. So welcome, Douglas PC. Glad to see you also in the live chat. So let me see what I know we've got the question on treasuries. Again, if I'm missing anyone's topics for ETFs, please throw it back up in the chat. I'll try to catch it. I do want to look at treasuries. So Tanavir last week asked about shorter term treasury ETFs, so 2-year treasury ETFs, etc. And again, we'll look at the ETFs we have on treasuries. But to answer his question, I did some, I ran a screener in the ETF database, so you can see the results for that screener. And you can use this to look at all the treasuries. And what I did then is in this spreadsheet, I have another tab where I can paste the results from any ETF database query into this ETF DB tab, and then it will automatically check the risk reward. So it then uses these Google Finance functions to check the low and the high, and then calculate the risk reward profile. It'll also get the 52-week low and high, and so then I can look at the risk reward profile for 52-week low to high, and look for something that's 2 or better. So again, you can see all of those, and this is all of the various ETFs or treasuries. And if we look at the ones that have a better than 2, you'll see they're all 20-year or better. So I'll let you all peruse that in more detail when you wish. But again, if we look at the ones that have a better than 2-to-1 risk reward profile, they're all longer duration, 20-year or better. We're currently long TMF. I know I believe Tanavir tends to prefer TLT. We can look at why we prefer TMF. But again, you'll see I couldn't find anything of a shorter duration that had a 2 or better risk reward profile in terms of a 52-week. But again, you can see the details of those if you find one that's attractive for a shorter term trade. That data again is available, and our Patreons have 24/7 access to this. So if I make any changes, you can see that as well. So also when I did the research on the Vietnam ones, I put that in the research tab, and then if it looks attractive, then we paste it into the main ETF spreadsheet. So again, we can look at those Vietnam guys. So now if you scroll down to Vietnam, this guy's in pink because again, he's not in FinBiz, so I can't automatically update the support resistance and top and bottom data. I have to manually go do that, but the other fields are based on the Google Finance function, so they'll automatically update. And you can see these guys have a pretty decent risk reward, but they're currently significantly above their support level right now. So by having them in the ETF spreadsheet, we've got a way to keep an eye on them. If they approach that support level, then we can add them to our watch list or take a position appropriately. So I hope that all helps. So hopefully I covered those questions. If I missed your question, please throw it up in the chat. I'll scroll down to treasuries a second. So here's all the treasuries we currently have in our spreadsheet. You can see TMB is a short it's a bear on treasury price, so it's a bull on treasury yield. Again, we're long currently TMF, it's up a little bit. TLT. See, again, I like TMF versus TLT because it's got a little bit better risk reward profile. So again, you can peruse this at your leisure. Look, I scroll through this at the end of every day, and I'm looking for, ones that have multiple greens that show me, okay, their risk reward profile is better than 2 or better, which is what the green signifies. So then I'm looking for potential opportunities. You see, we were watching BDRY, but it's significantly above support, so I'm not going to chase it at this level. Okay, so I hopefully answered those questions. We'll talk about some more. We'll talk about our shopping list a little bit. Someone and maybe it was Alan, asked about tax loss selling and harvesting, and that was a point I wanted to make about your shopping list. And if you're new to our channel, concept of the shopping list is, stocks you always wanted to buy on a dip, on a good opportunity. Um, but again, there's several caveats. These are ones that you probably want to hold, invest in for a longer period of time. Again, ones that you always want to buy and you're looking for an opportunity. It's always good to have that list of stocks ready. So if we do get a market crash or a significant dip, um, you know what you want to take advantage of quickly. Now, again, an important point in December, particularly in this time frame in December, is to be aware of tax loss selling and harvesting and the selling pressure that's going to put on stocks that are significantly down for this year. So if you've got a stock that's significantly down for this year, it may be vulnerable to tax loss selling or harvesting, which means whoever owns that may sell it just to take advantage of the tax loss on their taxes for this year, irregardless of whether they like the stock or not, or think it has a long-term, potential, whatever. They're going to sell it now to take advantage of the tax loss. So be careful with stocks that are significantly down for the year. In the past, we talked about cheap value stocks that are significantly down. They're close to their 52-week lows. My warning in December is to be careful with those because they potentially could significantly decline even more going into the end of December due to tax loss selling and harvesting. So again, be careful with those that are down significantly for the year at this time. Now, once we get into early January, and I'll talk about that more towards the end of the year, that changes significantly. We'll talk about how that reverses into early January. And again, I'm working on videos to explain in more detail what tax loss harvesting is, how it works. Also, what's the wash sale rule? How does that work? And then again, all this month we'll talk about the implications that has on our trading strategies. And again, I just wanted to bring it up now that be careful with your shopping list in particularly early December. Is I wouldn't buy anything that was significantly down for the year that might be vulnerable to significant tax loss selling at this time, because you can wait till the end of the month, and when it bottoms going into next year may give you a better opportunity. So I hope that helps. Again, I'll throw my financial advice banner up briefly. None of this is financial advice. It's educational purposes only, but I hope it helps. Also, just a reminder, don't get caught in the FTX bankruptcy fallout. It's ongoing. I guess they've got Senate hearings coming up, so be careful. Don't get stuck in zombie stocks. We talked about how biotechs, they don't make any money. They're burning cash. And again, that's why at this time, this is, in my opinion, it's just not the market condition for those types of stocks. When we get into a different market where growth is attractive and there are not reasonable alternatives for investment, then that thesis will change. Again, we still got high inflation. We're increasing interest rates, whether it's 50 basis points or 75 on Wednesday, they're going to keep going up. So make sure your stocks you're buying are interest proof against interest rate increases and recession. You'll hear most people still believe 2023 if we're not already in a recession, we're going to go into one. So let me quickly wrap up with some of the trade ideas we've been talking about, which is some of our option strategies. Let me add to that a sec. If you have a question, throw that up in the chat while I grab a drink, and then we'll try to wrap up. Okay, so for a couple weeks, we've been talking about our option strategies, and that, this is a good, um, in the choppy markets. I believe that, our option strategies of selling covered calls and buying them back. So we sell covered calls when one of our stocks goes up, buy them back when it goes down, or we're selling cash secured puts when a stock goes down, buying back when it goes back up. So in these choppy, volatile markets, that actually is almost a more attractive strategy than in a calm or trending market. So. And as the VIX goes up, I think those premiums actually increase too, due to the increased implied volatility. Again, we're still learning a lot of this, testing it out, etc. And I won't reiterate what we've talked about in the past. You can read that in the notes. I did mention last week, if you all are interested, if our Patreon members would like to have a list of ones we're looking at potentially selling cash secured puts, I can add that to that web page with these price targets. And again, you can see this in the notes. These are the ones I'm currently looking at. In particular, I think someone yesterday asked about Amazon. We looked at Amazon. And I am actively looking at potentially selling cash secured puts around that 81 strike price. Again, I'm watching that. Here's some others: RH Hardware, Tesla. I'm not as hip on Tesla due to its volatility, and I'm not sure I want to get stuck holding it. Google, I'm not so sure about CRM either. They're having some issues, some leadership issues. But just I put together ones that had a 2-to-1 or better risk reward profile. So if I did end up holding them longer term, I'd be interested in that. Ellen Krantz, and we're gonna have more detailed videos about tax loss harvesting and wash sale. But the answer is yes. You have to have sold before January 1st in order to take that taxable loss for 2022. Again, I'll go into more detail on that whole time frame and scenario. We'll also talk about potential Santa rally towards the end of the month. So a lot going on in December to talk about. So another thing, if anybody has any ideas, given that I have a list of a number of potential stocks to sell cash secured puts against, my question is, how do I figure out which of those are the best ones to sell cash secured puts against first? Obviously, it impacts my buying power if I open a cash secured put, sell on a cash secured put against anybody. So I'm trying to figure out, how do I prioritize these? How do I value them, given different expiration dates and pricing, etc. So anybody who has any ideas, please post in the comments in our Discord, etc. That's kind of the next thing, is how do I pick among the potential candidates, because I can identify even more potential candidates, but I want to pick the best one given the current option pricing, expiration dates, etc. And I want to automate that. Obviously, I don't want to have to do that manually, which, speaking of the automation, you can see a couple bonus videos we just did. You can access them via these links in the notes. The first one talks about automation that I already have in place to evaluate options and tell me, at what price to sell things. And then I just did another one looking at some of these other candidates and trying to select the strike price and expiration date at which to sell cash secured puts. So you can see some actual examples using the options chain in Webull, the charting of options in Webull, and how you can use those to select an expiration date and strike price to potentially sell cash secured puts at. So again, they're currently unlisted. We'll release them as we're able to, given our publication schedule. But again, as a bonus for watching our weekly trading game plan videos, you can access those now via those lists. And we have a number of other videos we've done in the past on options in our options playlist, so you can see all of those as well. So Okay, so I answered the Treasury question. We talked about yin and yang, China. We talked about biotech, LabU, LabD. I didn't talk about energy a lot, but in the past we've always talked about other pairs that are great candidates to make money. Day trading, scalping. You've got oil and coal and natural gas. You've got drip and gush and oil. There's plenty of opportunities to make money. Whether again, if the market's even just choppy, find where the momentum is, where the money's flowing, where's the sector rotation. You can find the ETFs for that segment in our spreadsheet and play the appropriate direction. So that's even Bitcoin, although I'm sure Bitcoin's way down. So BITO is BITI is the short on Bitcoin ETF. So yeah, it's very high. So, okay, I'm going to wrap. If you have any further questions, please put them in the comments below this video. In our Discord, again, our Discord's free to join. You can find the invite to our Discord in the description box below. Also in the link section of our homepage, which is beachbumtrading.com, bum without the U. You can find a link to our Discord. Also, we have a Facebook group. Here's links to all our social media. So you can also always contact us via social media. Please tag us in the Discord if you have a question. As you can see people have done. That helps me identify, things I need to look at, things I need to try to reply to. In some cases, like I've done here, I'll either produce a video response or we'll cover it in our weekly trading game plans if the response requires more elaboration, more detail. So PREU, I do not know what that is. So let me bring up, again, all the tools, all our platforms, tools, etc. You can find links to on our homepage in that link section. So I can, jump over to FinBiz, PREU, and it doesn't come up. If you're talking about Peru, okay, Peru. Yeah, I heard they've got some issues. Some political issues, so I wouldn't touch it. I wouldn't touch anything in there due to the political issues right now until that gets resolved, although it doesn't sound very positive. So for cash secured puts, okay, so there's a good question. For cash secured puts, do you need to buy 100 shares? Okay, if I'm selling cash secured puts, again, the contracts are 100 shares each, so I'm selling a put for 100 shares. If someone buys that put, then they can, if it gets exercised, then I have to buy 100 shares of that stock if it's assigned at that strike price. So, for example, if I sell, let's say Disney, I sell cash secured put at 86 strike price on Disney, and Disney drops below 86, and they exercise that option, that cash secured put, then I have to buy 100 shares of Disney at 86. So again, I'm selling these cash secured puts at a price that, I'd be happy with owning Disney at 86 or below. The opportunity cost risk is that Disney goes to 80. Okay, I could have got Disney at 80. I had to buy it at 86. I paid $6 more. You have to be okay with that. But yes, you have to buy 100 shares if it gets assigned of that stock at that strike price. So I hope that answers the question, and I hope that helps. So, okay, I'm going to wrap again. If you have any further questions, post them in the comments, hit us up in Discord, in the Facebook group, via social media. Otherwise, I hope everyone has a great trading week, December 12th through December 16th, and let's go make some money together. So have a great one. Have a great rest of your weekend, and we'll see you during the trading week. Bye.